Good evening and thank you for joining us on India Business Hour. I'm Arundhati Ramnan and here are the headlines that we're tracking for you at this hour.
For me, the interest of my investor is paramount and everything is secondary.
Gautam Adani puts on a brave face after an unprecedented move of withdrawing fully subscribed 20,000 crore rupee FPO. Adani says it would not be morally correct to proceed with the FPO and adds that the group's business operations have not been impacted. Adani Group has lost nearly 9 lakh crore rupees in market capitalization in just 1 week. The Reserve Bank seeks information from banks on their exposure to the Adani Group. RBI sources say that it is a standard practice to seek information if new developments take place and regulated companies have exposure. We learned that the RBI central database may not have the latest information, especially those linked to pledged shares.
बिना तथ्यों के कोई बात नहीं करना, प्लीज जाइए अपने जोन पे जाइए.
Opposition parties stage a walkout after Lok Sabha Speaker and Rajya Sabha Deputy Chairman refused to allow an urgent debate on the allegations of stock manipulation and accounting fraud against the Adani Group. Parties have also demanded a joint parliamentary committee probe and a Supreme Court monitored inquiry into the matter. The chief economic advisor says the Adani crisis does not pose a systemic worry, says the issue does not have the potential to derail the financial system. That's an exclusive. Electric vehicle makers will not need government subsidies for long, says Union Road Transport Minister Nitin Gadkari. Also adds that the final decision will be taken by the Finance Ministry and the Heavy Industries Ministry. That's another exclusive. Revenue Secretary Sanjay Malhotra tells CNBC-TV18 that the tax revenue projections for the next fiscal are very realistic and not a conservative one. He also defended taxing income from insurance policies with premiums above 5 lakh rupees. Says, and I quote, "We cannot allow insurance to become investment," end quote. DPAM Secretary Tuhin Kanta Pandey says that there is a need to calibrate the divestment strategy. Says there is less for the government to divest now as they've also implemented a share sale of 2 lakh crore rupees. Adds that IDBI divestment will be done by next fiscal. Stock markets recover in the last hour, led by private banks and FMCG stocks. Sensex gains over 200 points. Nifty ends marginally in the red. Investors digest the US Federal Reserve's 25 basis point rate hike and commentary. The government moves to unclog the deal clearance pipeline. Centre's law officers say that the CCI's quorum requirement can be waived off. The Law Ministry allows the MCA to invoke the doctrine of necessity to allow deal clearances despite the required quorum of 3 members. That's an exclusive. Dabur and Titan report a soft third quarter. Dabur's profits and revenue miss estimates, even though margins were higher than expected. Titan's revenue was above estimates, but it missed expectations on all other parameters. Shares of Facebook parent Meta rally even as quarterly revenue declines for the first time in its history. Mark Zuckerberg promises 2023 will be a year of efficiency, announces a $40 billion buyback. Straight to the top story this evening, Adani Enterprises has decided to pull the plug on its 20,000 crore rupee follow-on public offer, even though it was fully subscribed. The rare move, never seen before in the Indian capital market history, caused panic across the Adani Group's listed entities. In a regulatory filing, the company said it will refund the FPO proceeds to investors, citing market volatility and the fall in its share prices as the reason. Adani stocks have been under constant pressure after American short seller Hindenburg published a report raising several red flags. Ever since the Hindenburg report was released, Adani Group's market cap has eroded by nearly 10 lakh crore rupees. At its peak, the conglomerate's market capitalization was at nearly 25 lakh crore rupees, just before the Hindenburg report was released on January 24th. Now, the market cap was under 20 lakh crore rupees. Today, it stands at just over 10 lakh crore rupees. And in a rare public appearance, Group CEO Gautam Adani said the FPO was being withdrawn because it was not morally correct to proceed with it. Adani also added that the FPO withdrawal will not impact existing operations. Take a look.
Considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO. For me, the interest of my investor is paramount and everything is secondary. This decision will not have any impact on our existing operations as well as our future plans. We will continue to focus on timely executions and delivery of projects. Once the market stabilizes, we will review our capital market strategy.
The Reserve Bank has sought information from banks on their exposure to the Adani Group. Shireen Bhan joins us now with the details. Shireen, what are you picking up?
Hi. Well, yes, what we are given to understand is that the regulator has asked banks for information about the exposure to the Adani Group. Now, remember, this is not as if the Reserve Bank is taking some action. This is what we're given to understand as part of the standard operating protocol, given the fact that there have been significant developments that have taken place with respect to the Adani Group over the last few days. Now, as part of the standard protocol, the RBI is asking regulated entities, i.e. banks, if there are any fresh developments that the Reserve Bank needs to be aware of that may not have been factored in as far as the central database is concerned, which is CRILIC. Now, CRILIC does get updated weekly as well as monthly. Different data sets are updated weekly or monthly. And because there has been so much volatility in the Adani Group stocks and pledged shares, etc., just as far as abundant caution is concerned, the Reserve Bank has asked banks for any updated information that will clarify on any doubts that may arise. What we are also seeing, which is clear, statements coming in from various banks that do have exposure to the Adani Group. This morning we heard from IDFC Bank saying that there is no concern that the bank has. We heard similarly from State Bank of India. So individual banks also coming out and issuing statements on their exposure to the Adani Group as well as where things currently stand. So this is the RBI seeking updated information from banks as part of the standard operating protocol, given the sharp volatility that we have seen in the last few days.
Right, Shireen, many thanks for those details. Now, the Life Insurance Corporation of India, a key investor in Adani, has lost more than 38,000 crore rupees of its investment value in just 1 week. Yash Jain is here with more details. Yash?
Well, the dramatic fall which we've seen in Adani Group stocks, which started on January 24th, has had an impact on India's largest institutional investor as well, that is LIC. In just the last 6 trading sessions, the value of investments of LIC in Adani Group stocks, that has come down to 43,000 crore rupees. The same value on January 24th, that stood at 81,300 crore rupees. We've just put a few numbers together, and of course we had the LIC management going on record to say that the purchase cost for them of all Adani stocks over the years has been 30,127 crore rupees. If you put these numbers together, what we derive is that LIC is sitting with gains of just about 12,800 crore rupees as of end of day today in all its Adani Group investments. Now, this gain, compare it to the gain that we had on January 24th, which was 51,200 crore rupees. But at the end of the day, this is a very small portion of LIC's total investments. Out of LIC's total AUM, the investment in Adani is just 0.97%. Also, if you consider LIC's equity AUM, the investments in Adani Group stocks, that stands at about 8%.
All right, Yash, many thanks for those details. Now, the chief economic advisor told CNBC-TV18 that the Adani crisis does not pose a systemic worry. Take a look.
On the issue of markets, and I want to address this with both you as well as the DPAM Secretary, and it's been a fairly volatile last 24 to 48 hours as far as the markets are concerned. I want to link this back to your point that you made about the indigestion having been worked out of the system. Bank balance sheets are looking strong at this point in time. Corporate balance sheets are looking strong, and which is why you believe that we are on the cusp of unleashing the animal spirits in the economy. But would you be concerned, and I don't want to draw you into any specifics, but would you be concerned about the kind of exposure that large conglomerates have to the banking sector at this point in time?
Based on the information we have, it doesn't look like at this point it has got the potential to derail the beginning of a new financial cycle.
Meanwhile, the National Stock Exchange has put Adani Enterprises, Adani Port and Ambuja Cement under the additional surveillance measure framework. This move essentially means intraday trading will also require 100% upfront margin. The decision is expected to curb some amount of speculation and short selling. Now, the stock market saw some wild swings. A late recovery led by private banks and FMCG stocks took the Sensex higher by 200 points. The Nifty, however, ended marginally in the red despite the late pullback. Overnight, the U.S. Federal Reserve announced a 25 basis point rate hike. Fed Chairman Jerome Powell said the disinflationary process has begun. Time now for the big newsmaker of the day. Union Minister Nitin Gadkari told CNBC-TV18 that electric vehicle makers will not need government subsidies for long. Speaking to Shireen Ban, Gadkari said the final decision on EV subsidies would be taken by the Finance Ministry and the Heavy Industries Ministry. Listen in.
I feel that the industry don't need subsidy for that. But already, as far as the petrol car, the GST is 48%. And for electric car, it is 5%. It is also one type of subsidy. And because of the reduction in the cost, particularly the alternative fuel vehicle, now we are going to start flex engine. So I feel that now no more subsidy is required for that.
No more subsidy is required. I think there's going to be a panic within the
But
electric...
it is one thing I want to clear it. It is up to the Finance Minister and Heavy Industries Ministry. They are looking after all the things. It is up to them to decide the question. But because of the present scenario, the cost of finished product which is coming, and day by day it is actually lithium batteries also cost is reduced. Now there is an alternative for aluminum ion battery, zinc ion battery. Then aluminum air technology is very good technology developed by Indian Oil Research Laboratory. So I feel that now this is the time that the cost is reduced. That's the reason I feel that for economic viability, that now they don't need subsidy. It can be economically viable.
Well, that was Road Transport and Highways Minister Nitin Gadkari. Catch the full conversation with the minister at 9:30 p.m. as he talks at length about his deep interest in green energy, building more roads, reducing travel time and more. Moving on, life insurance stocks continue to witness volatile trade a day after the union budget. Although a few stocks recovered in the last hour, the budget proposing taxing payouts received from life insurance policies issued after April 2023 if the total life insurance premium paid in a year exceeds 5 lakh rupees. Shares of HDFC Life were among the top losers as it has a large share of large ticket policies as compared to the other players. Revenue Secretary Sanjay Malhotra defended the move, saying insurance cannot be allowed to become investment.
Insurance, of course, is totally exempt. Any proceeds out of on death to the dependent, that's totally. So pure term insurance, all of you are aware, is totally exempt and continues to be so. It's only the investments beyond a particular point where it no longer actually remains insurance, but it becomes more of an investment rather than an insurance, that we have removed the exemption, and I think rightly so, because the exemption is for insurance. It's not actually, for investments. If you want to make investments in equity, you want to make investments in government securities, I don't think, we deserve, the tax exemption status for that. So pardon me, this relief that has been withdrawn, and that's again, for very, very high values, because we do understand that there is a savings component which is attached, which has been for times, since insurance has been introduced, perhaps attached with, insurance. So we have continued with that. But others is something, I think it was time that we removed it. It's still very high, 5 lakh and 2.5 lakh in ULIP. So 7.5 lakh will give, cover with savings of about 1.5 crore rupees for an able-bodied 35-year-old individual, as per, some of the most popular schemes.
And you can catch the entire interview with Revenue Secretary Sanjay Malhotra at 10 p.m. right here on CNBC-TV18. And speaking at the same event, DPAM Secretary Tuhin Kanta Pandey said that the divestment process needs to be done in a calibrated manner. He also added that the government will continue to meet the divestment target subject to market conditions. He said they are on the path to complete the IDBI stake sale by the end of the next fiscal. Take a look.
Disinvestment, we will continue our, we will continue to strive to meet the target within the market conditions that we get in next 2 months. And put together, we have to look at different conditions and different stocks and look at, particularly looking into the interest of the minority shareholders.
And you can catch that entire conversation with DPAM Secretary Tuhin Kanta Pandey at 10:30 p.m. right here on CNBC-TV18. On that note, it is time for us to head into a short break. But coming up, the government moves to unclog the deal clearance pipeline. Centre's law officer says that the CCI's quorum requirement can be waived off. More details when we come back. Stay tuned. Welcome back. You're still with us on India Business Hour. Now, the government has moved to unclog the deal clearance pipeline. The centre's law officers have said that the CCI's quorum requirement can now be waived off. The Law Ministry allows the Corporate Affairs Ministry to invoke the doctrine of necessity. Parikshit Luthra is here to tell us more about this. Parikshit?
That's right. The decks have been cleared for approval of crucial merger and acquisition deals at the Competition Commission of India. At least 20 combination deals worth $1.3 billion have been stuck for the last 4 months as the CCI did not have the quorum required to clear deals. The CCI currently has only 2 members, with one doubling up as chairperson against a quorum requirement of 3 members. Sources now telling CNBC-TV18 that the government's top law officers have recommended that the quorum requirement be waived off as the process of appointment of new chairperson and other members will take time. The Ministry of Corporate Affairs, which is the nodal body for the CCI, has received a nod from the Law Ministry to invoke the doctrine of necessity. We hear that the approvals for the first set of M&As may come as early as this Friday, and more deals could be cleared next week. CNBC-TV18 had earlier reported that the CCI had approached the Ministry of Corporate Affairs to waive the quorum requirement as the process of approving M&As, FDI proposals and corporate insolvency resolution cases had been badly hit due to the lack of a full-time chairperson and the required quorum.
Right, Parikshit. Thank you so much for those details. Now, the Hinduja Group is looking to hike its stake in IndusInd Bank after the recent revision in RBI's private bank ownership guidelines, sources have told CNBC-TV18. This, however, would be subject to securing the RBI's nod. Ritu Singh has been tracking that story and joins in with the details. Ritu?
Well, that's right. We understand that the Hindujas are looking to hike their stake in IndusInd Bank to up to 26% after the recent revision in RBI guidelines, which allowed promoters to hold up to 26% stake versus 15% earlier. Now, through the promoter entity, which is IIHL Holdings, Hindujas own about 16.51% stake in the bank as of December, with voting shares at 15.16%. There's a few ways of going about increasing their stake to 26% if RBI does give them that crucial nod, and we understand they're still in the process of making that application to RBI. One way could be for the promoters to buy shares from the open market, but here there is a limitation because the foreign shareholding in private banks is capped at 74%, and that figure is already close to 66 to 67% for IndusInd Bank, so limited headroom there. The other way could be for the bank to issue shares through a QIP or a preference issue, but that also we understand is unlikely at this point because IndusInd Bank is not looking to raise equity capital in the near term. So we'll have to see how the promoters go about this, but step one will be securing that all-important RBI nod, for which certain preconditions will also have to be met by the promoters, including freeing up their existing promoter shareholding of any encumbrances, among other conditions. We reached out to IndusInd Bank for a comment, but they did not offer one for this story.
All right, Ritu, many thanks for those details. Now, Reliance Retail becomes the first retailer to start accepting digital rupee for in-store payments. It has launched the first in-store acceptance of the digital currency at its Fresh Pick store in Mumbai. Shilpa Ranipeta visited the outlet to check how the new payment mechanism is working. Take a look.
Late last year, the Reserve Bank of India started a retail pilot for the CBDC or the digital rupee, where consumers like you and I can also transact using that. And today, Reliance Retail has become the first retailer in the country to accept in-house payments using the digital rupee, starting with this Fresh Pick store in BKC here in Mumbai. So I'm here as a consumer, and let's see how I can pick up grocery using the e-rupee. Let's go. Well, I picked up a packet of bread and I'm going to buy this using the digital rupee. Hi, can I?
65, ma'am.
Can I pay using the digital rupee?
Yeah, of course.
So currently the digital rupee is enabled by select banks and select consumers. So here I have the digital rupee app by ICICI Bank and I'm going to use that to pay. Since I need 65 rupees, I go to load and I put 5 and then I load a 50 rupee token and then I load a 10 rupee token. That makes it 65. So I'm going to load the digital rupee using the UPI and confirm. Well, that was pretty straightforward, almost as easy as just using a UPI app to make a payment. And currently, while this is only live in this Fresh Pick store, the company says that depending on how the landscape for the digital rupee evolves, it will then extend it to all of Reliance retail stores across Mumbai in the next couple of months, and then eventually across all the 17,000 Reliance retail stores across the country. In Mumbai, Shilpa Rani Peta.
And with that, it is a wrap on this edition of India Business Hour. Many thanks for watching, but stay tuned. News continues right here on CNBC-TV18.
Co-presented by